Today, cryptocurrencies slide as tensions between Russia and Ukraine reach new heights. OpenSea responds to news of $1.7 million worth of NFTs stolen from its platform, and we dive into the hype around Web3 as well as the billions of dollars flooding that industry. Welcome to CNBC's Crypto World. I'm Kate Rooney. Crypto markets took a dive today, falling an average of nearly 4% by noon Eastern. Digital currencies moved in tandem with global markets as Russia took new steps towards a full-scale invasion of Ukraine. We'll have more on that in a moment, but Bitcoin dropping about 2.5% in the past 24 hours. At one point, the cryptocurrency fell to just over $36,000. That's its lowest level in more than 2 weeks. Ether, meanwhile, falling more than 4% since yesterday. It's now worth about $2,600. And XRP is among the worst performers. It fell about 10% in the past 24 hours. For more context on the crypto market, here's our own MacKenzie Sigalos.
Bitcoin and other major cryptocurrencies continuing to take a hit as the crisis in Ukraine intensifies. The situation on the ground between Moscow and Kiev has been roiling global markets as of late, and the Kremlin isn't easing up. On Monday, Russian President Vladimir Putin ordered troops into two separatist pro-Moscow regions in eastern Ukraine after recognizing them as independent states. The move is seen as potentially the start of a larger military operation, and it's fueling fears of a full-blown invasion. Now, those geopolitical tensions are sending global stocks lower as traders lose their appetite for riskier investments. Bitcoin was moving in lockstep with Asian stock indices overnight. The virtual currency dropped to its lowest level in more than 2 weeks on Tuesday morning, trading as low as $36,000. The world's biggest digital currency has lost almost half its value since hitting its all-time high in November. Now, Bitcoin is often referred to as digital gold, which in theory means that it's meant to function as a sort of safe haven asset during times of uncertainty. That argument not holding much weight as of late, as Bitcoin's price moves tend to align with equity markets. Still, we did see a bit of a rebound as countries like the US signaled that they'll be opting for sanctions over a ground offensive. On Tuesday, the UK announced its first tranche of sanctions targeting Russian banks and wealthy individuals. However, some aren't quite so optimistic. Take Jejun, for example. He's the co-founder of crypto exchange Wobi, and he told CNBC that he doesn't expect another Bitcoin bull market until 2024 at the earliest.
All right, so those are the price moves, but here are some of the headlines you should know about. First, some other news out of Russia, this time about crypto regulation. The Russian finance minister is moving ahead with new legislation to regulate cryptocurrencies in that country. The bill proposes a legal marketplace for digital currencies and a way for exchanges to receive licenses to facilitate transactions. The bill also requires platforms to warn users of the risks associated with crypto. The bill is at odds with the Bank of Russia's own proposed legislation, which advocates for an outright ban of cryptocurrencies. Next, OpenSea is responding to a phishing attack that stole over 250 NFTs. The attackers stole roughly $1.7 million worth of non-fungible tokens over 3 hours. This is according to the blog Web3 is Going Great. OpenSea says 17 users were affected by the attack, and CEO Devin Finzer took to Twitter, assuring users the attack didn't use an exploit on the website. Now, NFTs make use of the growing technology known as Web3. Some see it as the future of the internet, while others remain skeptical that it can live up to those high expectations for decentralization. CNBC's Crypto World took a deep dive into the tech and the billions of dollars in new investments.
A lot of people are talking about Web3 right now.
I think it depends how you define Web3.
Web3 is so huge in our industry.
As technologies like cryptocurrencies, NFTs, and the metaverse gain new levels of popularity, developers are looking for ways to bridge the gap between all of these products and the web we all use today. Advocates say that Web3 will be the revolution that makes this possible.
Web3 is being able to have your own identity, having self-governance, having to be able to store your own data instead of having it controlled by someone else.
Skeptics say it can't live up to the hype.
The reason I say that we should be skeptical but not dismissive of Web3 is because Web3, like almost every new technology with a lot of promise, has been overrun with fools and charlatans.
Even Elon Musk has weighed in on the technology. But how did we get to version 3 of the internet? Well, think back to the 1990s, back when the internet was small. That was Web 1.0. Users navigated forums, chat rooms, or static websites, and the power really belonged to the users and the small group of people producing content. That would soon change. The explosion of tech companies through the 2000s and 2010s marked the era of Web 2.0. Facebook's takeover of social media, Google's indexing of the entire internet, Amazon's plan to sell you anything with one-day shipping. Those are just some of the examples of major players staking their claim over the World Wide Web, and control of the internet moved entirely to those tech giants. Web 3.0, it claims to put some of that control back into the user's hands.
We define Web3 as the newest internet. There's really an emphasis on giving ownership to the community, which we think is a really important iteration.
Web3 would bring Ethereum-style blockchain technologies to the internet. Advocates want to make smart contracts or automatic blockchain programs, and technologies like NFTs and tokens an essential part of the web going forward.
The main point behind Web3 is the blockchain technology should, in theory, allow it to be more decentralized than ever before.
Advocates also say it would cut down on the need for tech regulation, but there are skeptics. Notably, Jack Dorsey expressed his frustration with Web3 on Twitter, saying the technology is centralized and controlled by venture capitalists. And to his point, VC firms have poured billions of dollars into making Web3 a reality. Andreessen Horowitz pledged $3 billion toward Web3 development and invested in companies like NFT marketplace OpenSea.
I think the way we approach it is to look for big ideas and amazing teams. We look for credible technical architectures, very talented teams. And so, we draw our decisions based on those factors.
Skeptics contend that Web3 isn't the great equalizer that proponents claim it to be. Those with the money to make early investments stand to make even more money and more investments as Web3 develops.
There has been a sort of ambivalence in the Web3 world about this, because the Web3 world, like Web2, like the original internet, was really set up by people who were outcasts, who were outsiders, who said, this is going to be a great utopian experiment. And then all of a sudden, wait a minute, here are all these millionaires and billionaires coming in and financing and owning these big projects.
Some argue that Web3 isn't decentralized enough anyway. OpenSea controls a big part of the NFT market, for example. Exchanges like Coinbase still process the bulk of crypto transactions.
It has to start somewhere, and someone has to light that spark. I think more importantly, it's not where Andreessen is in the very beginning, is where they are in the middle of the journey. And as any blockchain or crypto company evolves, it should strive for more and more decentralization over time.
Web 2.0 also isn't going anywhere. Many companies rely on Web 2 services and just work better without a blockchain. These are the challenges Web3 advocates still have to battle as they make their case for Web3 adoption.
Before we go, we want to remind you that you can find all these stories and more on cnbc.com/Crypto World. With that, you're all caught up for today, but we'll be back again tomorrow with a lot more. We'll see you then.